Hi and welcome to our in-depth analysis of the HDFC Retirement Savings Fund Equity Plan. In this video, we will provide a comprehensive understanding of this mutual fund, from its basic details to its investment philosophy and risk factors. The HDFC Retirement Savings Fund Equity Plan is a popular mutual fund designed for those seeking long-term capital appreciation through investments in quality stocks. Let's start with the mutual fund analysis. But before that, let me introduce ourselves. We are PA Wealth, an investment services group. We offer stocks PMS, mutual funds, alternative investment funds, insurance, and startup investments. Every week, we upload research videos on different companies, mutual funds, and financial topics. Stay ahead of the curve with the latest trends and insights by subscribing to our channel and clicking the bell icon to get notified about potential multi-bagger stocks. Let's start with the basic details. The HDFC Retirement Savings Fund Equity Plan is an open-ended equity scheme. It was launched on the 25th of February 2016 and currently manages assets worth approximately 4,036 crores. The net asset value as of the 5th of January 2024 stands at Rs 42.09. Let's take a look at the classification portfolio of the fund. This fund falls into the equity category, and more specifically, it's classified as a retirement equity fund. This means it primarily invests in large cap stocks but also has bought into mid and small cap stocks. First, let's look at the portfolio mix by market cap size. Regarding portfolio composition, large cap accounts for 52.9% of the total composition. Mid cap accounts for 13.2% of the total composition, while small and other accounts for 23.2% and 10.7% of the total composition of the fund respectively. Second, the top 10 holdings of the fund. Here are the top 10 holdings of the HDFC Retirement Savings Fund Equity Plan, in which HDFC Bank, ICICI Bank Contribution and Infosys are the top 3 holdings of its portfolio. Third, the top 10 sector exposures. The fund is exposed to various sectors. Here's a breakdown of its top 10 sector exposures, in which banks, pharmaceuticals and IT software are the top 3 sectors, while the fund has also exposures in other sectors. Now, let's look at fund managers and their tenure of managing the scheme. The current fund managers of the HDFC Retirement Savings Fund Equity Plan are Mr. Srinivasan Ramamurthy and Mr. Shobhit Mehrotra, who have been managing the scheme since December 14, 2021 and February 15, 2016 respectively. Mr. Srinivasan Ramamurthy has worked with Mahindra Mutual Fund, IDBI Federal Life Insurance, IIFL Capital Limited, KPMG Advisory. He has a Bachelor of Engineering and an MBA from IIM Calcutta, respectively. Mr. Shobhit Mehrotra has worked with Franklin Templeton AMC and ICRA. He is an MBA from Clemson University, USA. Both fund managers have a strong track record of performance. The HDFC Retirement Equity Fund has outperformed its benchmark index in the long term. Now, let's take a look at the investment details of the fund. The HDFC Retirement Savings Fund Equity Plan has minimum investment amount of ₹100 for both lump sum and SIP investments. There is 5-year lock-in period for this fund and exit load of 0% is payable. Now, let's look at the returns generated by the fund. As you can see from the table above, the HDFC Retirement Savings Fund Equity Plan has outperformed the S&P BSE 500 TRI index over the past 1 year, 3 years, and 5 years with 37.66%, 27.94% and 21.74% returns respectively. You can also see the performance of other funds of the same category as compared to the S&P BSE 500 TRI index. Now, let's take a look at the top drawdowns. Here is the historical drawdown chart of the HDFC Retirement Savings Fund Equity Plan. It gives you insights into how the fund performed during market downturns. Now, let's move on to the investment philosophy. HDFC Retirement Savings Fund Equity Plan is a regular plan mandated to invest at least 65% that are growing quickly and have the potential to become leaders in their industries. The fund's investment team picks stocks based on their research, without any bias towards a particular investment style. Now, let's take a look at the taxability of earnings. First, capital gains taxation. If the mutual fund units are sold after 1 year from the date of investment, gains up to 1 lakh rupees in a financial year are exempt from tax. Furthermore, gains over 1 lakh rupees are taxed at the rate of 10%. However, if the mutual fund units are sold within 1 year from the date of investment, the entire amount of gain is taxed at the rate of 15%. Importantly, no tax is to be paid as long as you continue to hold the units. Second, dividend taxation. Addition, dividends are added to the income of the investors and taxed according to their respective tax slabs. Further, if an investor's dividend income exceeds 5,000 rupees in a financial year, the fund house also deducts a TDS of 10% before distributing the dividend. That's all for today. I hope you found this video helpful. If so, please give it a like and subscribe to our channel for more research-based financial content and click the bell icon for potential multi-bagger stocks. In the comments below, let us know what topics you'd like us to cover in future videos. Thanks for watching.